Analysis of balance sheet. As we all know, balance sheet is a very crucial thing in our life for every individual. Analyzing your balance sheet is very important for your own individual financial health also, as well as the company's balance sheet, financial health. So if you are already in the board of a company, then you might want to analyze the balance sheet and understand. By seeing on the face of the balance sheet, you should be able to make out what is the financial health of the company, and where does it stand in comparison to its peers. Since this today's session is completely on analyzing a balance sheet of a company, I'll be taking up according to company's perspective. So what is the principle and practices of accounting? Before understanding a balance sheet, we need to understand what is the principle and practices of accounting. First is we need to understand what is the statement of profit and loss. What are the notes to accounts? What are the cash flow statements, and what are the balance sheet? So these are the four financial statements. When we say what do you mean by a financial statement? Financial statement consists of these four items: balance sheet, PL, cash flow, and notes to account. Many a times people get confused that trial balance is also a part of financial statement, but no, trial balance is not a part of financial statement. Financial statement parts are only these four, which comprises the whole finance of the company. In profit and loss, we explain, or the entries which you see that are relevant as an expenditure and income of the company. In cash flow statement, we see the cash management, how the cash inflow was there and what was the cash outflows. We get the details of those things in cash flow statements. And in the balance sheet, you get the details about the asset and liabilities of the company. And if there is any such details about those asset, liabilities, or expenditures, that we can see it in the notes to accounts. Because on the balance sheet, on the PL, you will see the total amount of any particular item. Let's say I talk about plant and machinery. A company might have 10 different numbers of plant and machinery. So giving all the details on the balance sheet is not possible. So they will give the total of the amount on the balance sheet. And if you want to deep dive into it and check how many numbers of plant and machineries were there in the current financial year and what was the value of those assets, then you might need to refer to the note related to that plant and machinery, which will be referred in the balance sheet. So now we will talk about how does a balance sheet looks like. I am assuming that everyone is able to see my screen. I'll just try to zoom it. No, I'm not able to zoom.
Yeah, it's not very clear.
We can zoom at our end, Krishna.
Okay. Yeah. Okay. Thank you so much. Yeah. So this is the pro forma of a balance sheet. Here we write down, part one, balance sheet. We need to write the company's name. And here you will see balance sheet as at. So for India, the accounting period is April to March. Okay. Like if I talk about currently, so the current financial year started in April 2021 and it will end in March 2022. So that is one financial year. And when does this balance sheet is done? The balance sheet is done as at 31st March 2022. That means when you see a balance sheet, you will know that on that particular date, what was the status of the company. So the complete period will be mentioned as a 31st March 2022. And then coming here down, here you can see the amounts. It will be written amounts in lakhs or thousand, whatever as per the company method, how they want to account it. And first, this is the liability side of the balance sheet. So balance sheet has two sides. One is asset and one is liability. Always remember, I think this most of you are already aware, it has to balance. Both the side has to balance. If in general world also, if one is imbalanced, it is not going proper. So you need to do something to make it a balanced balance sheet. Okay, you have to find out where is the error or what is the reason that there is an imbalance. The first topic which comes is equity and liabilities. Under that, we get share capital, reserves, money received against share warrants. Second item which we can see is many companies will have share application, money pending allotments. Non-current liabilities. Now, what do we mean by non-current? Here, I'll just go through the item numbers and then I'll be explaining one by one all the items. Next will be non-current liabilities. Under that, lot of other liabilities like long-term provisions, other long-term liabilities, deferred tax liabilities, and long-term borrowings will be there. And current liabilities, under current liabilities, we'll get short-term borrowings, trade payables, other current liabilities, short-term provisions. And that will give us the total liabilities. Again, coming down to assets. Assets you will get is property, plant and equipment, intangible assets, capital work in progress, intangible assets under development, non-current investment, and deferred tax assets. Long-term loans, advances, other non-current assets. Current assets you will we need to identify is current investment, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other assets. Now, what do we mean by share capital? What is the first item on the liability side of the balance sheet? What is share capital? So, if you see in the picture, what can you make out from the picture? There is a person who has some question marks all around, and there's money here, and this is our India. So what is share capital? In simple terms, share capital is nothing but when does a company start? A company start when a person has an idea. I got an idea and I want to put that idea into reality. Correct? So when can I make it a reality? I cannot just keep on thinking and things will happen, right? I need to work for it. So what will I do? To start anything, to start any business, you need some amount of money. At least how much ever small your company is, you need money to start your business.
Yeah.
Thank you, Sudha. Yeah. So a person got an idea. Now he need money to implement that idea into reality. So either that person will have his savings, some of his savings, or his जो हिंदी में बोलते हैं उसकी कुछ जमा पूंजी होगी, कुछ पूंजी होगी उसके पास जो उसने सोचा होगा कि मुझे बिजनेस बनाना है. बिजनेस यू कैन नॉट मेक इट इन वन डे, राइट? आपके दिमाग में बहुत सालों से होगा कि जब मैं ग्रेजुएट हो जाऊंगा या व्हाटएवर, व्हेन आई डू दिस कोर्स, उसके बाद मुझे ये बिजनेस करनी है. So what you do, you keep on, accumulating that money for the business. So that money which you introduce in a business for the initial setup is called share capital. My money, either I have put it in the business or I have borrowed it from my friends and relatives. Initially, this only happens, right? We reach out to our friends and relatives that you give me money, I'll repay you in 2 months, 6 months, 1 year, whatever. So all that founders' money, all the promoters' money, which is introduced in the company, is known as share capital in simple terms. Okay. So obviously, once this, let's say your company become listed, so what happens? You will have share capital, like you'll have shares for your capital. So since I was a promoter and I was a founder of the company, I had put in a lot of money in the initial time of the business. I will expect some return. So what is my return? I will have a certain percentage of holding of the total share capital. Okay, so that means out of
Krishna.
100,
Krishna, can I ask a question here or take it towards the end?
okay, no problem, you can ask, tell me.
Okay. When you say share capital, when you say the amount of money invested by the shareholders, so one is definitely when they're planning to start a business, that time they will put in some money, maybe
Yes,
whatever, let's say some X lakhs of rupees they are putting in.
right.
So, and then maybe when the business will see ups and downs.
Hmm.
And let's say when during downward trend, let's say they, or even uptrend, they want to, push in more money into it. So
Hmm.
all that money goes into the share capital. Is that
No,
all
no,
of us? Hmm.
no. That is separate. That is separate.
Hmm.
See, when the company goes into ups and downs, the money, the extra money, where does it goes? And if we have to take out some money, from where does that money come? It comes in a separate top. It comes in a separate heading.
This share capital is only the money which has been initially invested by all the shareholders.
Yes. So I'm talking about the initial share capital as of now.
Okay, fine.
Later on, when I discuss, you will understand that this will also include other money. But as of now, I'm discussing about the initial share capital which a promoter introduced in the business.
Okay, thanks.
Okay, anytime.
Yeah.
Okay. So, if it's not a private, if it is a not a listed company or a public company, you will see it is mentioned as capital. When it is a listed company or a public limited company, then we will have the shareholding. So promoters will have certain percentage of holding in the company. It can be anything 40%, 60%, 70%, 50%, as per the guidelines of SEBI. Okay, so we will not go too much in detail into that, but this is just for understanding what do you mean by share capital. Now coming to reserves and surplus, you will see in the balance sheet there is an item mentioned as reserve and surplus. What does this mean? So when your company is performing good, when you are generating good profits, what happens to that profit? That profit, some part of the profit is distributed to the shareholders, and some part of the profit the company retains within themselves for their own expansion or future expenditures. Right? If I have 100, if the company has 1 lakh profit, it will not distribute all the profit to its shareholders, because it needs to keep something, it needs to retain within the company also. Within the company funds, there should be some amount for any uncertain exigencies, or if the company has some expansion plan or whatever, right? So that retained amount, whatever the company retains, is accounted under reserves and surplus. So this is nothing but the excess money or the net profits of the company, which gets accumulated year on year. Year one, 50,000 got, we had excess, the company had 50,000 excess, it put it under reserves and surplus. Next year it had more 80,000, it put it under reserves. Third year it had more 1 lakh, it put it under reserve. So ultimately, if I see on the fourth year, if the company have not taken out money from the reserve and surplus, then first year 50 plus 80 plus 1 lakh. All the three amount you will see on the fourth year reserve and surplus, along with fourth year's profit. So these all now total, if you see, someone had asked a question, what will be the share capital? Then when we see the total capital amount, we see share capital plus reserve and surplus. That is actually the total share capital of the company. Okay. And sometimes the company might have some losses also. So in that case, that amount is also adjusted through reserves and surplus. Okay. So as you see in the picture, this is year 1 of reserve and surplus, this is year 2, and this is year 3. So this is how it gets accumulated, and this is the amount it becomes as and when the year keeps on going on. Okay. Now we'll talk about long-term debts. What do we mean by that? So what do we see from the picture? Any idea, any guesses? What do we see from the picture?
It's the loan loan that we take?
Yeah, no, I mean, can you understand what is there in the picture?
It looks like there is a person in the middle who is collecting some money or something from another, and other people are they are playing some instruments.
Okay.
This
Looks
is
like a
Britishers at the
recovery
time
scene.
of Britishers, how the
Yes.
system was. That is what.
it's more
Yes.
of a system. Yeah.
You can
Yes.
see some Indians and some Englishmen. Yeah.
Yeah. So who was that? Can we all
Lagan,
clap?
Anupama Krishna.
Lagan
Anupama.
kind.
Oh, actually, I can't see. That's why.
Yeah, no problem, no problem. I am now off video. I'll just come
Okay,
on video. also.
great. I think, yeah, Lagan Britishers. So what happened in the Britishers times? So what they used to do, they used to very smartly, they used to take the lands of the farmers, Indian farmers. And in return, what they used to give them is peanuts, small amount of grains, or, one, Hindi mein agar bole to ek bora, do bora anaj ka de diya, this is what you can have, or you get this much money, but we take your land. So what the farmers were, in spite of the fact that they were not happy with the structure, they were working for the Britishers because they were indebted towards them. उनका जमीन उनके पास है, ब्रिटिशर्स के पास उनका जमीन है, so it's a long term debt. And that is how the Britishers were playing with their emotions or their goodwill or whatever we can say. In return, they were giving them peanuts. They got everything signed that now I take your land on lease and you are mera bandi. You have to be my bandi, right? तो लॉन्ग टर्म डेट भी ऐसा ही कुछ होता है. लॉन्ग टर्म डेट मतलब एक कंपनी के लिए, if I talk about a company, so what do we mean by long term debt? Why does a company needs a debt? Okay, company needs debt. Debt means loan. Okay, so loan company may need for various reasons. One is for daily expenditures, if it is not able to meet its daily expenditure. I think in COVID we had seen many such cases when suddenly the world was hit by the pandemic, and no one even had thought this in the wildest dream that something like this would happen, right? So when such thing happened, many companies were under financial stress and they had to take loans because they were locked down, their business were not operating, but they needed money to run their business. They needed money to pay their salaries. They needed money for their operations. So for that, they had to take loans. So business will need loan for various reasons: daily expenditures, maintaining their working capitals, or if they have some expansion plan. I have the idea, this current business is really going well and I want to expand it in the next location, but I don't have the funds. So it will go for loans. So one is long-term debt and one is short-term debt. Long-term debt is a debt which a company will take for more than 12 months. Let's say a company took loan from bank saying that I will repay it for after 5 years or 7 years. Or when it wants to expand, it has to take a building. Like we take home EMIs. We take it for 10 years, 20 years. Similarly, a company also might want to purchase a property. So for purchasing that property for its own business as a factory or a warehouse or whatever, it might need to take a long-term debt. So that is called long-term debt, which is more than 12 months. Where the payback period is more than 12 months is known as long-term debt. So when you analyze a balance sheet, you need to find out what is the amount of the debt the company is holding and what is the process. I mean, you have to see the past performance of the company, whether that company is making a repayment of their loans and the amount is coming down, or it is adding more loans to its balance sheet. This is how we analyze to understand whether the company has the capacity to run the business or it is just adding on every year loans. If it is adding on more loans, that is also not good for the company's financial health. Then we might need to check that what is the reason behind it.
So Krishna, one question, will all the companies have this, or good, healthy, financially healthy companies will not have a debt component? How is it?
See, it depends from companies to company. Okay, it
Mhm.
completely depends from company to company. Some companies might have more debts in the more debts in comparison to the assets and equity. Some might have a good amount of equity and debt to have. So that is again a detailed discussion, like how does a company work? What should be the ratio? So if you see, how can you make out whether that company's financial health is good or not? So for understanding that, you have to find out with the key ratios of the companies. So how can we read the ratios? Like there are various financial ratios by looking at which you can understand, you can make out that what is the financial health, and then you go deep dive it into the balance sheet or P&L to see the daily transactions or the yearly how it performed. So it completely depends on the company to company. But yes, to your question, Anupama, there has to be a balance. Like asset and liabilities has to be balanced. If the owner puts lot of assets also and the liability side is less, that is also not good for the company. So it has to be balanced, and we can see that from by calculating the ratios, various financial ratios.
And there are some prescribed, as you're saying, no, that balance or what those ratios should be. So there would be some guidelines around that, right?
Yes, yes. So yeah, there will be guidelines like if it is 1:1, it is good. If it is 2:1, it is good. If it is below that, it is at high financial risk. All these parameters will be there, which we can discuss in our further sessions. Okay.
Yeah.
Now, long-term provision. You'll also see a term called long-term provision. Not all the companies will have it. Now, here, whatever I'm discussing, that are generally the part of the balance sheet, but it is not necessary that all the companies will have all the key items which we are discussing. Okay, some may have, some may not have, but these are the part of the balance sheet. It comes under balance sheet. So long-term provision, what is long-term provision? One example is gratuity, which many companies have in their policies, but they sometimes miss out to account for that. Okay, so what is gratuity? If we see from the picture, employer says this employee renders a good service, I should thank him. And then he says, I will pay you for first 15 days salary for every year you have been working with us. An employee says, just thanks for my 10 years of hard work. And then the employee says, okay, not just thank, I will give you something in monetary. So what I'll give you 15 days of your salary for every year you worked. Okay. So what is the idea behind it? Employer want to retain the employee for a longer period, right? So now many companies, there are different policies around gratuity. Okay, that let's say if you work for my company for more than 5 years, you will get the gratuity. If you work for my company for more than 7 years, you'll get the gratuity. So then if the employee is already there in the company and it is a 6th year, what the company needs to do? The company need to calculate his gratuity and create a provision. Creating a provision, why? Because he don't have to pay it right now. When does the gratuity is paid? When the employees leaves the company, that time that gratuity will be paid to him. So suddenly, if on the 9th year the employee leaves and the company have not accounted this provision, then on the 9th year it will be a trouble for the company to find that money from where it will take out. So we have to create these provisions also on a regular basis, so that even on the 9th year we are ready with his amount. If he wants to leave the company, we can pay off that amount. So that's why it is called provision. It's not a sure shot.
Krishna, is it like provision? This provision means that keeping that money aside.
Yes, keeping that money aside.
Yeah. Every year.
Every year, yeah.
Okay.
Okay. So provision means it might happen, it might not happen. Okay, liability side provision we create maybe sometimes when we see we had made some sales, right? But that debtor is not making the payment. So we have a timeline, 1 month, 45 days. He still didn't make the payment. We are following up. So we create provision that this is something, this amount we might recover, we might not recover. So we put it under provisions. Okay, so same is the case with the gratuity. Yes, you have to pay that amount, but no, if that employee decides, if that employee works for 30 years, then till 30 years you don't have to pay that gratuity, but you have to keep it aside. One point of time you have to pay, right? So that will be under long-term provisions. Next comes
Krishna, I have one question. So this gratuity will get accounted only from 5th year, or it will get accounted as soon as the employee joins?
no, as per the company's policies. If the
Okay,
company
so-
says you will get not from the first year, because if the company says only if you work with me for the at least 5 years, then you will get gratuity. Then his gratuity will be calculated. If a employee works for 2 years and leaves the company, he will not get any gratuity.
Yeah, so in balance sheet, I mean, if there are 10 employees which are over and above 5 years, and there are another 8 employees which are below 5 years. So I mean, whether the gratuity will get calculated, I mean to say in balance sheet for 18 employees, or only accounted for 10 employees for 5th year onwards.
No, it will be calculated as per the provisions only, but the payment will be made only as per the conditions.
Okay, okay, sure, understood. So for those for whom the gratuity is provision, then only they only will get accounted in balance sheet.
Yeah.
Okay, okay, yeah. Thanks.
So a small request, you can note down your questions and we can take it to the end. So
Okay, okay, sure.
because of the
Yeah,
time.
thanks.
Yeah, thank you for that.
Okay. Now coming to short-term borrowings, like what items are included under short-term borrowings? Payment of accounts payable, wages, taxes, other expenses, capital expenditures, long-term financing expenditures. Like short-term borrowing are the borrowing which you take for less than 12 months. Like pandemic, suddenly it arose. When was the lockdown? I think March 2020, right? So think about it, that all the companies were running, everything was going fine. They thought that in the March expenditures will be paid in the first week of April. Suddenly there was lockdown. Okay. Then first week of April, from where will the company get the money to pay off his expenditures? Because if the business is shut down, then definitely his revenue will be hit. Correct? So from where he will get the money? So such conditions or certain situation when such occurs, then the company goes for a short-term borrowing. Some examples are, overdraft going, asking bank that, I have some balance in my account with your bank, but I need this much money to pay off my expenditures, which I will, pay off after some time. So, or going for some short-term borrowings, I need loan for 2 to 3 months, which I will pay after that. So below 12 months period, if the payoff period is below 12 months, those borrowings are called short-term borrowings, and not necessary that the company only reaches to the banks. The company will have certain other financial institutions, or within his network or within his contact, within his relatives also, he can reach out. The promoter, if he has those connections, he'll reach out to other people also, saying that you give me this amount as a loan, I will repay you within 12 months. So those categories of loans or borrowings will be termed under short-term borrowings. So when you analyze the balance sheet, you also have to see that what is the pattern of the company, how regularly it is taking the borrowings, and whether it is repaying it, or it is adding on the value, or it is decreasing on the value year on year when you analyze the balance sheet. Property, plant and equipment is the next item. ये कहाँ आता है? Liability या asset? कौन बताएगा?
Asset.
चलो, thank you. I know. I'm happy कि ना मेरे students को इतना तो पता है. So
आपके जैसे टीचर होगी तो पता होगा.
So प्रॉपर्टी, प्लांट एंड इक्विपमेंट हमारा एसेट होता है, कंपनी का एक एसेट होता है, करेक्ट? और वो कंपनी को why does a company need a plant, property and equipment? Definitely बिजनेस चलाना है तो फैक्ट्री होनी पड़ेगी अगर वो मैन्युफैक्चरिंग में है, या एक ऑफिस होना पड़ेगा अगर वो सर्विस में है, तो कुछ तो एक स्ट्रक्चर चाहिए, राइट? सो दैट स्ट्रक्चर जो है वो कंपनी का एसेट है, वो कंपनी की प्रॉपर्टी है. सो उसमें आ जाता है जैसे प्रॉपर्टी, प्लांट हो गया जैसे फैक्ट्री, वेयरहाउस साइट्स जो होते हैं, दो वो आ जाएंगे हमारे प्लांट्स में. एंड इक्विपमेंट्स मतलब जो मशीनरी वो लगाती हैं कंपनीज फॉर मैन्युफैक्चरिंग या एनी अदर प्रोसेस, वो हो जाता है इक्विपमेंट में. प्रॉपर्टी आ गया आपका ऑफिस बिल्डिंग या अदर स्टोर हाउसेस या वैसा जो होता है वो प्रॉपर्टीज में आ जाएगा. सो ये लॉन्ग टर्म एसेट्स है क्योंकि नो बिजनेस, आई एम मिक्सिंग हिंदी एंड इंग्लिश सो दैट it is better for everyone. So long term assets में ही ये यूज कैटेगरी में आते हैं because no business will take open a plant or open a property just for 1 year or less than 1 year period, because they will have a intention of growing the business for a long term perspective. So these assets fall under long term assets. Okay, I think this is pretty simple. But yes, as a if I talk about analyzing the balance sheet, जब आप बैलेंस शीट एनालाइज करते हो तो आपको ये देखना है कि उसने कितने, उसका वैल्यू कितना बढ़ रहा है. एवरी ईयर ऑन ईयर कंपनी अपने बैलेंस शीट में पीपीई, इसका शॉर्ट फॉर्म है पीपीई ऐड ऑन कर रही है, और या उसका डेप्रिसिएशन कितना हो रहा है और उसका वैल्यू कितना है. उस हर एसेट पे डेप्रिसिएशन होता है, करेक्ट? उसका डेप्रिसिएशन रेट कितना है, और अगर मेरी जो प्रॉपर्टी है या मेरा जो प्लांट है कितना आउटपुट दे पा रहा है, हमको वो एनालाइज करना है. कि अगर वो 1 लाख की मशीनरी है, ठीक है, 5 साल हो गया उसको यूज होते हुए, इट्स हैड बीन यूज्ड फॉर लास्ट 5 years, and after 5 years whether I'm getting the relevant output from that equipment or not, or can I get a better equipment from the market and generate better outputs. So वो comparison भी आपको करना है when you check on the balances, because if there is a equipment जो पुराना हो गया है, जिसका आउटपुट उतना नहीं मिल रहा है, but we still continue with doing that, तो हमारे आउटपुट पे इफेक्ट पड़ेगा. अगर हमारा आउटपुट पे इफेक्ट पड़ेगा तो हमारे सेल पे इफेक्ट पड़ेगा. अगर हमारे सेल पे इफेक्ट पड़ेगा तो अल्टीमेटली हमारे नेट प्रॉफिट पे इफेक्ट पड़ेगा, विच इज द वेरी इंपॉर्टेंट पार्ट. हर फाउंडर या ऑल द बिजनेस क्यों रन करता है? टू जनरेट हायर एंड हायर रिटर्न्स, टू जनरेट हायर एंड हायर प्रॉफिट्स. So when we analyze PPE, we have to also just not seeing the value. You have to deep dive into it and see, are there any redundant assets which we can skip off from our balance sheet and add on some new products. Of course you have to see the you have to see the financial status also of the company, whether we can go ahead with something new, whether it adds on value to the company or not. But this is how you analyze the asset side of the balance sheet. The next item comes on our intangible assets. Why it is called intangible? Because we can't touch that assets. Those are the assets of the company which we can't touch. We just know that we have those assets, but we can't touch. Anything which you can't touch are intangible. And companies will have intangible assets like Apple का brand logo है. What is that logo? Can you touch that logo, or do you have a physical form of that logo? No, it's a brand. Patents, knowledge, how much knowledge a company has, or how much knowledgeable person the company has. We cannot touch the knowledge. Same likewise, goodwill. Tata Motors की एक goodwill है तो है, राइट? अगर आपको कोई बोलेगा कि आप टाटा मोटर्स के शेयर्स खरीद लो, आप आंख बंद करके खरीद लोगे? विल यू रियली गो एंड डीप डाइव एंड सर्च वर्च करके आप करोगे कैसी कंपनी है, कैसा परफॉर्मेंस दे रही है? General people will not do, but yes, people who are very much into, they want to see how the company is performing, return percentage क्या है, comparison mode में, वो जरूर करेंगे. बट अगर एक जनरल आपका फ्रेंड आके बोले कि मैंने टाटा मोटर्स का शेयर लिया था और उसका वैल्यू बहुत बढ़ गया, आप आज जाके खरीद लोगे, दैट इज गुडविल. उसने मार्केट में गुडविल बनाई है. एंड ट्रेडमार्क्स. सो दीज एसेट्स, एंड मोस्ट इंपॉर्टेंट थिंग, you will not see a goodwill in any company until and unless there is an amalgamation or merger or acquisition between two companies. You will see a goodwill in a balance sheet of a company only when these transactions have been taken up. Okay?
Why so, Krishna? That point is not very clear.
Because if I talk about Tata Motors, ठीक है, उसको खुद का वैल्यू पता है, बट उसकी जो मार्केट में गुडविल है, उसको एक गुडविल बनाना पड़ेगा, एंड समवन हैज टू पे फॉर दैट गुडविल. सो when if let's say if Tata Motors is acquired by another company, so when the company acquires Tata Motors, what he will do, he will purchase all the asset and liabilities of Tata Motors. Over and above, he have to pay the goodwill amount also. So when that company pays for the goodwill, then that balance comes, that entry is done in the balance sheet. Means you're paying for something which you can't see. You have not acquired it, but actually you are acquiring it.
Okay,
Getting
so
my-
which means when the evaluation of the company is done for, let's say, acquisitions, I mean, apart from the physical assets,
Yes.
etc., it is the intangible assets also which get
Yeah,
evaluated.
which they have to value and which they have to account in their balance sheet, in the new company's balance sheet.
Okay,
Okay.
okay, fine. Thanks.
Okay. Now coming to non-current investments. So non-current investment are similar to non-current liabilities. Any investments which the company have done for a period of more than 12 months, those are the categories which falls under non-current investment. So if you can see in my slides, if it is 1 year period or 1 year operating cycle, those assets are known as current asset and current liabilities. These are used to evaluate the working capital. Okay. Beyond 1 year and beyond 1 year operating cycle is non-current asset and non-current liabilities. So some assets which are non-current, which are more than 1 year, but used in the company, will fall under these categories. Next is long-term loans and advances. What do we mean by long-term loans and advances? Why it is an asset side? Loan is a liability. Why is it under asset side? Can anybody answer this?
The loans which you have given, the company has given.
Yes, correct.
Tax benefit?
Who was it?
Is it tax benefit?
No. Who told company had given
Usha,
loans? Usha.
Usha.
Yes, very correct. So it is not necessary that I will always need money. I always have to take loan from the banks or other. My company may be doing very well, and so much that I can give loans to other companies. Right? They might come and ask me that do you have money? I need some money to run my business or any other reason. So from companies books also, there can be loan given to other companies or other people who are in that requirement, in that need. So those amounts will be termed under long-term loans and advances, which I have given. Advances means sometimes companies employees ask for advance and all. So if the inflow period is more than 12 months, then it will come under long-term advances and loans that I have given my employee. One of my employee, he needed a loan and he said that he will pay me back in 3 years. That I will categorize under long-term loans and advances. Okay, so that is an asset. Why? Because that is my money. I have given it to someone else. And of course, if I have given it to someone else, I'll be getting interest on that person, interest on that loan I gave. And then after that, I will get the loan repayment also. So that is why it is an asset for me.
So all the big investors nowadays who are investing into small startups and all, they would be doing very good in terms of this loans
Yes.
and advances.
Yes, correct. Okay. So they do a very detailed analysis. Okay, they do a very detailed analysis. That is why you see so many investors. Not everyone gets the funding. Not everyone gets the requirement, because they have a very strict policies and rules to approve one funding, because it is the investor's money. Of course, I will want that my money, I should get the best return. Otherwise, I'll just put my money in share market where I get the highest return. But why I'm putting my money in your business? Because I should see that your business has that potential and you have that idea. And you should have something you should have in backup. What if your idea doesn't work? So they do a very detailed analysis before approving any of these fundings for startups.
So Krishna, for example, just giving a recent example of Shark Tanks. I mean, everyone is watching this show, right? So generally they offer something like, okay, I will get 10% share, suppose for 1 crore. I will give you 1 crore as a date. Okay, so you are saying this 1 crore, which they say that I will give you as a date, will fall under the long-term
Yes.
loans. And what about a 1% equity which they got from that 1 crore thing? So that would fall under what?
Equity, share capital. They'll become the
Okay.
shareholder. 1% means they say that 1% equity we will take, means they become 1% holding, all the they get 1% holding in the company.
Okay, sure. Yeah, thanks.
Okay, anytime. Now coming to current asset, which is very important for us to understand, because that gives us a picture of the company, that how is it operating, उसके ऑपरेशंस कैसे चल रहे हैं, अच्छे चल रहे हैं या नहीं, हमको करंट एसेट से पता चलेगा. क्योंकि करंट एसेट और करंट लायबिलिटी जब हम कंपेयर करते हैं तो हमें पता चलता है ऑपरेशन वाइज हाउ द कंपनी इज डूइंग, वर्किंग कैपिटल वो उसका कैसे मैनेज हो रहा है. ठीक है. सो करंट एसेट में क्या क्या आता है. करंट एसेट, दो तरह के एसेट होते हैं, एक फिक्स्ड एसेट, एक करंट एसेट. फिक्स्ड एसेट जो हमने डिस्कस किया, विच इज लैंड, मशीनरी एंड बिल्डिंग. करंट एसेट में आता है कैश, कैश एंड कैश इक्विवेलेंट, बैंक बैलेंस, इन्वेस्टमेंट्स और डिपॉजिट जो कंपनी ने किया होगा, और इन्वेंट्री. ठीक है. तो कैश एंड कैश इक्विवेलेंट एंड बैंक बैलेंस क्या है. कैश मोस्टली, अब तो एवरीथिंग इज नाउ डिजिटल, very less amount may be in the cash, but still जो फिजिकल कैश आपके पास है, कंपनी के पास है 31 मार्च 2022 को, that will go under cash. 31 मार्च 2022 में आपके बैंक बैलेंस में क्या क्लोजिंग बैलेंस है, that will go under बैंक बैलेंस. इन्वेस्टमेंट एंड डिपॉजिट जो आपने करके रखा है या किसी को दे के रखा है, ये आपके पास, यू हैड लॉट ऑफ मनी and you didn't have any expansion plan or other things as a company, then you wanted to invest that money somewhere, then you invested that money in some financial instruments. That balance. And inventories यानी whatever production, जो भी प्रोडक्शन कंपनी ने की है पूरे साल में, पूरा साल का प्रोडक्शन के बाद लास्ट में 31 मार्च को कितना स्टॉक बच गया आपके गोडाउन में, जो आपके वेयर हाउस में या गोडाउन में बच गया है, इन्वेंट्री जो आज के डेट में 31 मार्च को जो है, वो बैलेंस आपका वहां आएगा. दैट विल बी अंडर करंट एसेट. व्हाई इन्वेंट्री इज इन करंट एसेट? बिकॉज 31 मार्च को वो बैलेंस है, लेकिन वो सेल हो जाएगा अप्रैल में ना. यू एक्सपेक्टिंग कि अप्रैल में, जून में, वट एवर यू हैव इन योर माइंड, कि वो सेल, वो वेयर हाउस से निकल के मेरा सेल हो जाएगा प्रोडक्ट. So that is why it is within 12 months. वो rotation होते रहता है. So these all categories come under the current asset category.
Where does dead stock come? That is also inventory.
Yes. Inventory में. Mostly
Achha,
all
but
companies.
will that be an asset only?
It will be an asset,
Because
but
it is-
mostly, yeah. See, what happens is the company have their own policies. अगर they see some dead stock is there, they have a time period. They try within that time period कि उस period में ये उसका sale हो जाना चाहिए. But really अगर उन्होंने उसको categorize कर दिया dead stock में, then they might have to scrap that stock if they are not able to sell, or they might have to just tear it off. So these are the two options. If they find some market for their stock, even if in loss or at cost price, they might sell it at that price if it is a dead stock.
Okay, in that case, they have to book losses, right? Because the inventory is not getting sold at the
Yeah.
selling price,
Yes.
maybe at a cost price. Okay, cost price means no profit, no
No
loss.
profit. No, there, when you say dead stocks, they might have to go below cost price also. Whatever
yeah.
they, so when they do the accounting, they have already categorized it as a dead stock. So now whatever they get is the amount which inflowed, which they had not expected. If I give you an example of a debtor of 1 lakh rupees, he had taken a purchase in the month of June, saying we gave him a credit period of 45 days. Okay, 1 lakh rupees, we made a sale to him and he said 45 days credit period, I will make the payment. After 45 days, our company kept on following up with him, but he didn't make the payment, saying my business is not running well and these and that and whatever. Okay. So according to our company's policy, what we had done is 45 days is a credit period. Then after 45 days to 3 months, we will put it under provision of debts. Provision of bad and doubtful debt. Means this debtor is not paying the amount. This might become a provision. This might become a bad debt. So we'll create a provision. So it can be 3 months. It can be 6 months. After that, till the time also, if we don't get the payment, then that amount is categorized as bad debt. Means 1 lakh rupees ka loss you have to book in balance in the PL, showing that this was something which we could not recover and this becomes a loss and it will affect your net profits. Now again, after booking the bad debts, let's say after 9 months or 10 months you book the bad debts, but you get that amount, then you might have to do it a reverse entry saying bad debt recovery. So this is a whole process, like just to explain you the debt stock, I just gave the explanation.
Yeah, thank you so much.
So, Krishna, we have 5 more minutes. Okay, that's the last.
I think we are already almost done. So the session is open for question and answers. And before I move to the question and answer, I would like to end my session with a very beautiful quote of Peter Lynch, that never invest in a company without understanding its finances. The biggest losses in stocks come from companies with poor balance sheets. So this is for you all to understand how to analyze a balance sheet. And if you want to make some purchases of some shares, equity of any company, you need to check its finances and then you invest in that company or be part of that company. Thank you so much. Over to you all for question and answers.
There is one question